This week, we are expecting reports from big banks, Netflix, Delta, Johnson & Johnson. We'll get a clear picture, hopefully, of the impact of the pandemic on business. Joining us now to discuss all this, Neela Richardson, Principal and Investment Strategist at Edward Jones, and Brian Levitt, the Global Market Strategist at Invesco. Good morning to you both. Neela, I'll start with you. Do you think we will get a clear picture of what is going on? Because so far, for instance, Pepsi reported earnings this morning, still declined to give guidance for the rest of the year.
Yes, Melissa, good morning. I think it's going to be about as clear as mud. So no, I do not think we're going to have a very clear picture of earnings because this is really an unprecedented, unpredictable trigger for earnings this time around. But what the consensus shows is that the pain, the toll, the hurt will be largely felt in the second quarter, and then improving in the third and fourth quarter, and seeing some signs of a rebound in 2021. So while we may not know the numbers directionally, what we should see is some consistency, that as the economy reopens, even if it's bumpy, even if there is rising risk with these new outbreaks, that there is some sense that the economy is recovering in the second half of the year and that earnings will live up to that recovery and stock prices will continue to climb.
I'm glad you mentioned consensus, Neela. Brian, I was reading the stat this morning that the median spread of analyst earnings forecasted for the second quarter is 40 cents, and that's up from 30 cents, which implies that analysts don't really have a good handle on what to expect either. And the volatility that could be born out of that dispersion could be great coming out of this earnings season. How do you recommend investors invest, particularly in an environment where it seems like a lot of the momentum and tech stocks, they're getting all the favor these days? And those could potentially be the highest volatility.
Well, I actually think that trade's going to continue. I mean, look, the dynamic of this market has changed in recent weeks from this idea of breadth widening to the more value-oriented cyclical parts of the market. And I suspect, given with cases rising, it's still going to take some time until we get there. And so it's going to continue to be, in my opinion, a world where we favor growth wherever we can find it. And, I suspect that a number of these true growth companies are actually going to look better through this earnings season than people suspected, because these are the companies that are taking advantage of these structural shifts that are happening in the economy and in society. But, I would advise investors to, and I think the market has largely done, is to start to look beyond this second quarter. I mean, the market down almost 40% in 20 days in February and March, forecasting a very nasty couple of quarters. But, now the focus is on this recovery and where earnings go from here. And it's not going to be a straight line. It'll be intermittent. It'll be challenging. But on the other side of this, we're going to be in what I think is a very long, protracted recovery with very accommodative policy. And that should be supportive of risk assets. And I think it'll likely continue to be supportive for the true growth companies.
Neela, what parts of the market do you like right now? And in terms of the earnings we're expecting this week, there's a whole slew of them. Are there any in particular, and I know you're not a stock picker, but are there any in particular that you're watching sort of as bellwethers for the rest of the market?
Absolutely. I mean, first of all, we think that there's risk and opportunities in every sector of this market, especially if you're expecting some pullbacks with a bumpy recovery, a protracted recovery. Those are the opportunities when you see those pullbacks to really diversify across sectors. But when we're looking at sectors, we're looking at tech and we're looking at healthcare, and we're not being broad-based in that outlook in terms of what we favor. We're looking at industries. We want to take advantage of this growing need for connectivity. And so we like software, we like internet services companies, we like companies that are not tied to physical manufacturing and global supply chains that we think will be disrupted for a period of time. And then again, in the healthcare sector, it's a sector that people need regardless of the economy, but it's also a sector where the winners tend to be those firms that are innovative. And then across all sectors, it's really those companies with strong balance sheets that can grow their dividends over time, that are the ones to watch this earnings season. They can weather the COVID storm and come out on the other side ready for that recovery and ready to kind of take advantage of these secular trends going forward.